Okay, just getting into it. Got Asia sort of just underway, a little bit of volume sort of coming into the market. DXY's just come online. Um, just start off with DXY. So this pretty much played out to a T, as sort of planned out yesterday. As you can see, this sort of line that we drew out of that sort of while doing the analysis yesterday came right up, failed to break over the top of what we call this sort of like little sort of intermediate short-term channel, which is also a little bit of this sort of like falling. I think it's probably better seen on a yeah, on the 1 hour. You can see that this is more respected here. So this is what's important sometimes to sort of go back and forth through the time frames, because sort of like you're sort of looking at it and you're like, oh, so I mean this is a bit of an arbitrary looking line. I guess you could sort of put a bit higher with the tops of the wicks on the 4 hours there. But anyway, we drew it out with the 1 hour, and we could say that that was the confluence of it all. Bang, and it got rejected, and it got rejected hard. So I was sort of saying that the previous sort of wick highs were the sort of like levels that we were looking for. Um, Obviously, if you've been watching anything, you know that I'm sort of favouring more of a USD slow grind back down from these highs, and I've been sort of calling these as little sort of short coverings and short squeezes. Sorry, not short coverings, short squeezes. And it's starting to sort of push back down now here as well. So anyway, following on from yesterday, we did get that sell-off. We obviously saw it once it took out those wicks from Friday. There was a quick move down to target, which was the lower side of this little short-term channel that we've got sort of set up here. So typically, as I've said a couple of times, DXY does love to follow its gaps. This morning, tiny little gap, what are we at, like 2 points or so. Obviously, swiftly sort of closed it, if you want to sort of call that. I mean, there's not really much of a gap in that. It's pretty flat there. But a couple of things of where it is now, it has actually taken us back underneath this falling resistance, which it attempted to, as you can see here, attempted to make itself a support. So there's a good chance now that we sort of test to see what's going to happen with this level as it pops up again to here. So I would say sort of like, despite sort of as I said, DXY always does love to follow the gap, or not always, of course, but a lot of the time. I'd expect a push up to the top side here, probably retest the underside of these wicks from Friday, and then I'd be looking for a little bit of a continued sell off to the downside here. And if we break yesterday's wicks, so something along these lines here, if we can break yesterday's wicks, which are obviously just over here on the bottom of this little support area, a break and a close under there, we'll be seeing it come back down to test these sort of main support levels. And as I sort of stated a couple of times with this, we've got, I mean, this has sort of come down here a few times, and obviously the fired straight back up here. So whether these are actual people sort of buying it, or it's whether it's just to try and squeeze out some of the early short positions, whatever happens, the market is happy to push it up and drive it up from this zone, and we know that. This is why I've got my alert down underneath last week, what would be last week's lows, which came in on the Tuesday. So if we can get down underneath that there, I mean, look, this low each time has sort of come in a little bit lower. So, there's probably something to contend with and think about at this zone here as well. If we get a sort of, a fourth connection here, is it going to sort of do the same again? I think eventually they're just going to let it go because, as I said, I think this is just snapping out short positions and they're going to sort of take it down sort of afterwards. But obviously they want to sort of break a few people first. They want to break them mentally. They want to break them financially. People that jumped in and they're like, oh, I got short, bang, I got stopped out. Got short, bang, I got stopped out. I give up on the trade, move on, do something else, and that's when they'll move it. So they just want to sort of like, crush a few spirits first, in my opinion. I mean, of course, this thing could still end up doing a bit more of this full range along here, which is what I've sort of been saying along here. I didn't think we were going to get a straight meltdown, but certainly, yeah, it seems to be sort of, it's still grinding sideways realistically, but it does feel like these push-ups are just getting sold into, and you're still seeing like the US seems to be the only economy at the moment that is consistently producing positive data. But the positive data is being sold into. So, you got to sort of take note of that as well. That it's sort of like, whereas it should be sort of driving it to push it higher, creating more demand, the market's just using those sort of positive bits of data as sort of fuel to sell into. So, it means that sort of obviously there's portions of the market that are happy to take their profit up the top here. And this is why they keep driving it back up, just so they can sort of sell it back down as well. So I don't work on anything with volume, but it'd be interesting to sort of see the volume that comes in on these moves up here compared to sort of how it is sort of coming on the downside. But yeah, I would expect a little bit of a sort of push up here. We've got a couple of bits of news coming out. Sort of today, tomorrow. It's actually quite a busy week for it all. We've got BOJ coming out today with their rate sort of decision. So they don't give a time typically. Well, not typically. They don't give a time as to when they sort of are going to give out the rate decision. So that's a bit sort of like, leaves the market a bit on edge as to sort of what's actually going to happen, when it's going to happen. But certainly that's been a big talk of it all, that possibly, and I think the market is expecting that they might actually finally do something, give a little bit of sort of talk about sort of like, increasing rates just a little bit somewhat. This will obviously sort of mainly impact, like in this regard, UJ or JPY crosses. But by proxy, if we do get a sell-off on UJ, I'd imagine that to then sort of be across a lot of the USD crosses. So you will see DXY obviously sort of push down. UJ does make up part of DXY, but I'd imagine you'd see it on the other crosses as well. We'd see a little bit of a sort of a reaction and a sell-off of the US dollar. So this also plays into this little outcome here. Push it up, drag in a few people, and then drive it back down. We've got FOMC coming up, what is it? I think it's Thursday morning or so. Some ridiculous time, 4 o'clock, 4:30. That's with the Fed expected to pause. So again, if they're expected to pause, depending on their sort of language, that could also be another driver to get the US dollar to sort of sell off a little bit down here. So yeah, they're just a couple of things, sort of more major ones to sort of be aware of, just sort of coming through the next couple of days. But all in all, for DXY at the moment, yeah, I mean, we are still in this little short-term range. Obviously, a little bit of an overshoot here. This is what I was saying the other day as well. Top end, I think I labeled it, I'll call the video the top end of that squeeze. So we've seen a little bit of a sell-off here. We're coming down to the 50%. Again, you just need to continue making those lower lows to sort of see what we can do, just have a continuation of this direction. So we can drag this out a little bit further because you know that this is where it has tended to respect so far. Somewhere along here. Not a big happy one. No, so no, I'm going to get rid of that one. I'm not a big fan of that. But certainly this top side here has provided a little bit of a sort of resistance. So if you do get an overshoot, you can expect at least one push down once it does come into contact with this line as it sort of comes down. All right, so flip it across to Aussie. Aussie, very interesting. Look, I'll go on to this other Aussie chart. That one's obviously a little bit scrappy. We do it on the shorter time frame. Aussie got that push yesterday. So yesterday, this is where we were sort of doing the video saying, look, it had come back to that 38% because it had that little sell-off come into the close of Friday's session or last week. Positive move all through the day, obviously sort of coming up into the zone, which I'll get to in a second. We had the retail sales, and they obviously sort of blew it out of the water. So that coupled with the CPI sort of increasing two months, month on month, you've got the four top banks, and that sort of tipping to see a hike in November. Apparently, November's quite a common month for them to do the hikes and that as well. So yeah, I think it's very much looking like it's the case, and I think this is finally RBA doing something to sort of show that okay, look, we're going to tackle the issue. So that's a bit more of the sort of fundamental side of it all. From a technical point, this is what I'm interested in because as you know, like I've been trading this wedge that's sort of been playing out all the way down here, and it's been getting tight, 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 tight. Yesterday's daily candle. This is the first time that we've actually got a close outside this falling resistance. Every single time it's come into it. I mean, if we sort of have a quick look at this, where's the little measure tool? Here we go. The sell down from this, 200 points, 215 points. Next sell down, 157 points. Next sell down, 100 points. Next sell down, 100 points. Every single time. They're big sell downs. I mean, that's 1.67%, 1.2%, 2.45%, 3% sell off going back to sort of just the start of this month. A 3% sell off in like 2-3 days. That's massive. So, you know, they've obviously been hammering it from this line. It's been well respected. Get these ones out of the way. The fact that now we're seeing a little bit of a change and it's closing outside, that's perking a couple of ears up. I think sort of some people are starting to go, okay, there might be something to this here. So where it has sort of stopped, so we've got this sort of area marked out here because, you know, you can't just sort of trade one thing, okay, it's the wedge and that's it. Because, you know, not every portion of the market trades at the same. And as you can see, where I've got these little sort of measured moves here are actually from coming out of this zone here. So I'm not calling the measured move from the break point, which, you know, could be incorrect, but whatever. It would be sort of obviously bring it down a little bit lower. But I've done it from this zone because, as you can see here, this has been, you know, support, support, you know, bit of an overshoot, bit of an overshoot, resistance, resistance. This is a very sort of solid swing point for this lower end here. So you need to sort of confirm by popping out and getting above. So the first sign is obviously that you're out, you've closed the daily on the highs outside this sort of falling resistance. But now we're looking at these horizontals. So we're looking at the sort of this point here where we know that, you know, sellers have driven this down here. Sellers have driven this down here. You know, a bit of an overshoot with these ones here. But, you know, if you look back a little bit further, you know, they've bought it up here. They've bought it up here. Once you can sort of confirm and go above these levels, all these sort of people here are sort of all of a sudden sort of starting to think, hold on, wait, there's a bit of a change with it all. And you're going to start to see, I would say, a fairly fast move once you start to get up to the top side here. I mean, there's still a lot of zones along here, and this is on a daily. So, I mean, you can still sort of go, you know, this could be the next zone for you here. This could be the next zone for you here. This could be the next zone for you here. And they're not massive zones. So, which one is? So these could also be like areas where you'd be looking for the price to sort of bounce back through it all. Obviously, I've got the price target up around here, high 65s, because I think once we start to take out a couple of these levels, I imagine there's going to be the stops around these areas. But it's not going to be easy. Like, I don't think Aussie's going to fly straight through it all. But I do think sort of if you can double up now, if they can sort of push to the top side here and sort of like flip this daily and really sort of confirm a break of this channel, this wedge and this falling resistance, I'd expect a lot of the market to start to go, okay, hold on, wait, let's see what's happening with the Aussie here, whether it be sort of just squeezing some shorts, or whether people sort of start to go, oh, hold on, wait, sort of, you know, we're valuing it down here. I'd expect it to continue push to the top side there. If we jump on to, I think it was the weekly, wasn't it? Yeah, so this is my weekly plan with it all, is the idea that, of course, we let's move this out of the way. The idea, of course, here is that we see a repeat of the semi-price action that we had back in May, whereas we had a known support. This was on a weekly, well, it is on a weekly, and that now you've got 4 weeks, so basically a month of the bottom side here, bottom of the monthly side here, which could trap a large segment of the market. And what happens when people sort of go trapped? They squeeze. Because all the people that are short here going, oh, yep, no, we're going to go driving down here, because the next stop was a pretty clear-cut sort of direction down here at, say, 62, 61.80-ish. But, you know, if they're holding shorts and they want to get here, there's going to be a point where they just have to give up. And we can see the next big main zone is this sort of 64.50, where it's sort of like, we haven't had a weekly close above this zone. Well, I guess technically from start of August, but even that was in an incredibly ugly sort of bearish move. I mean, look at this. This 5 weeks straight of just straight down. And that's what I was saying on the video yesterday. It's just really just been this slow car crash bear coming down here. So, if we get back up into this zone, I think sort of like, a weekly close above 64 will do us quite good. And if you actually sort of flip one higher onto the monthly, it's a bit messy with these ones here, so I'll take the view off here. But if you can see this with the monthly, if you can get the back above 64, so 64.50 will flip the monthly candle. So it's 70 points off, not unachievable by any means. I mean, there's only 12 hours left. So, you know what I mean? It might need something fairly strong, but you know what I mean? Bottom line is if you can get back above these levels here, because these are the ones that you want to sort of get above, whereas you've seen buyers on a monthly basis were unable to close it underneath 63.80. You want to get it back up here again. You want to repeat that kind of price action so it's back up above 63.80 for the monthly close. And people are going to go, well, we couldn't close down here, couldn't close down here, potential double bottom. And with the double bottom, we're going to see a firing up and a move to the top side here. Realistically, if you look at that, that's pretty ugly. But the point being is that this could be a double bottom down here, and you could certainly see some appreciation up until like, as I said, 65 is my first price target, but up until like 67 is not off the cards if you can sort of get a positive move through next month. So jump back down onto the lower time frames because that's all well and good sort of planning it all out. Here's the here and now. We're coming up into this zone where we've seen it sell down before, push over a little bit here, of course, but this is that daily zone that we got marked out. So you need to pop this out. You need to take out those sort of highs. That'll give you 3 higher highs in a row, and I expect a little bit of a continuation. But realistically, at the moment, I think the market seems to be just basically stalling and fairly flat as it awaits sort of BOJ first off the bat. And then I think the market's going to be sort of looking forward to the FOMC after that. Cool. Flip across to gold. Gold's been trading very well from a technical basis, and that like it's a very uniform sort of proper sort of price action. Like as you can see, these little points here. So boom, okay, we got this one. I thought it'd come down a bit quicker first, but the point was still to this horizontal line here. So I may not get the time right, but I definitely get the level right. And as you can see, that level, bang, as it came on and connected with this sort of rising support here, certainly played its part, bang, fired straight up. But that's the thing with gold. It did the same thing the Friday prior as well. And it just sees this continue sort of drift sideways. And this is what I was saying on the weekend videos, what I was saying on yesterday's video as well, that the daily take, it was just going to sort of drift. It needs to justify, it needs to give it a reason. Why is it going to go higher? You know what I mean? Like the whole sort of thing going on with the Middle East at the moment is seeming to be a little bit of a, like obviously it's still going, of course it is, but you start to think sort of like, is there a point that the market starts to go, well, we can't hang around for this forever, as they sort of do little sort of skirmishes back and forth. These guys have been fighting for years. So, I don't know, as long as sort of larger people don't get dragged in, I think eventually the market's going to go, okay, we can't continue like this forever. I mean, you look at the Ukraine war, like when that first happened, all over the news, everyday updates, constant things. This happened, bang, market moves. This happened, bang, market moves. But eventually it just died off. Like it's still going. Like, seemingly, I don't know, I'm not up to speed with it all, but, you hear these things of Zelensky, you hear these things of Russia, and they're threatening each other and they're doing all this stuff. But there's a point where the market goes, you know what, there's other things going on in the world. And I start to sort of think, what I mean? Like, what is it that Israel and Gaza adding to the economic view of the world that's really going to affect so much? I might not just, I'm definitely not completely clued up with it all, but my feeling is that there's not a great deal from an economic standpoint that affects the rest of the world. The main caution with that situation is if the larger people get dragged in, and they're the people that affect the economic side of the world. But if it remains just sort of like tit for tat skirmishes between these guys, I think eventually the market's just going to go, okay, what's happening next? And they're going to move on to that. Like, so I was seeing the news yesterday, and they were saying there was something, I can't remember what the article was exactly, but there was joint military operations between China and the US that were going to be happening based on being mutually beneficial. Um, this is 1,000 times more relevant in terms of an economic sort of thing than Gaza and Israel, as far as I'm concerned. You've got the two largest superpowers that are trying to mend sort of ties, and that'll open up to possibly sort of reduction in tariffs, more trade, these kind of things. That's what's going to be more prominent from an economic standpoint than what happens with Gaza and Israel. Like, it's horrible, the situation, yes, but from an economic standpoint and from how it impacts the markets is why we're here and what we're talking about. I don't really sort of think it's is if unless these things escalate, I don't think it's going to be a sort of massive thing. It's not going to die away. Like, I imagine this is going to continue on for a long time. And yes, it's a horrible situation, but it's been already happening. Yes, it's escalated, but yes, it's already been happening for a long time. So I don't know. We'll have to sort of see how things happen and that and progress and move forward. Gold obviously had a bit of a sort of flat-ish week, then closed strongly. We're seeing a sort of little bit of a repeat with this. 2006 was the price level we were looking for. That's what we got. And now we're just seeing this little drift sideways. So again, you can start to look at the little zones. I wouldn't be surprised, honestly, if we don't get anything massive, that we see a little bit of a drift in gold. I'd be looking to sort of get long again. Like, I still think we're worthy to sort of go back up over to these levels, but I wouldn't be surprised if, even they just blow out some technical things. So say you take out this sort of short-term rising support here. I mean, this has only got two touches, but it sold down from both of them. So, and obviously it's continued to sell down a little bit here. So from a technical basis, this could be starting to look like a sort of little bit of a rising wedge. And if we look at this with a rising wedge, we sort of say, okay, well, it's better where you want to take your wedge from, but I'll take it from here. A breakdown of this puts you back down sort of 1950. And you got to start to think from a technical standpoint. If you haven't got the ability or the reasoning, the fundamental values, anything to sort of get it to drive higher, and we start to sort of see a bit of a break south, where are people going to start to take profit? And you know what I mean. You've got some nice lines here on different sort of time frames where there's going to be some stops. So even if it does, and as I said, look, I still think it's got more of a top side, but I think a fairly deep flush is probably coming unless we get a sort of justification. Again, if you get FOMC pausing, this could also affect things. And, if people are sort of bailing out of US dollar, well, gold's, what I mean, still a good sort of choice of safe haven. So I could be wrong, and that could be the driver, which actually sends it right up to, 2020 to 2040, these kind of things. So that's an FOMC move up like this. But if we don't get anything as a driver in terms of the war and that, and say we break this first sort of rising support here, I'd imagine a test of the horizontals, where we know it's been valued here and last week. I think people will give it a shot there. I reckon we could then sort of have a retest of the underside of this rising support. Now, that'll be the crucial one there, because that could be the one that goes back up here. So that could be your second scenario. Or the third, which I am probably sort of leaning towards at the moment, would be a push to this horizontal, a break of this, retest of this underside, another retest here, which will sort of be retesting the lows of that, and a break of there, I think could give us a fairly deep flush. And then that could give us this push down here. Now, as to whether it makes it all the way to 1950, that's still a fairly big move, and obviously that's going to sort of break the back of a lot of people. But these are the possible scenarios. So, I mean, you got two outcomes here, basically sort of saying up. You got a third one sort of saying it comes down here. Once it does come down here, I still think it'll go up here. So regardless of it all, I think above the 2020 to 2040 is on the cards. It's just a matter of whether they continue to drive it or whether they try to sort of flush a few people out first and they start to look down at these sort of zones over here. So you got to think a lot of the market is sitting in profit through these weeks here. So what you want to try and do from this sort of point is you want to sort of hit some known stop levels. And you know the known stop levels are just under the key points. So these are the stops here. So you'd have a stop here, you'd have a series of stops here, you'd have a series of stops here. I mean, and you can see it just walk its way up. These kind of things here. And if you can hit stop, 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 that'll get you down to this price target over here. And let's just pull this here. And that could give you your push to come back up here, grab all this liquidity, get it in at a better level, and then drive it back up over here. But yeah, just really got to sort of see what happens. Like, you know, because the whole sort of war thing is obviously the driver, people going to safe haven. US dollar hasn't done anything since it started. Typical sort of risk things like the Aussie, that hasn't really sort of done, hasn't really sort of sold right off. Gold's been the number one appreciator through this whole sort of period. So I'm not quite sure where all the funds have come from that, if it's not from sort of like, you know, just rotating from, you know, other sort of assets and that to sort of to move into gold. Well, obviously that's where it sort of come from. But yeah, I think there's a good chance that we start to see a little bit of a technical flush out here because you've had the Friday and didn't do anything. Friday didn't do anything. I think there's a lot of people that are going to go, hey, we can do it again. So maybe even sort of see how it goes towards the end of the week, and maybe you know people will be buying on the Friday, thinking that we're going to get this same Friday drive up, and that could be the liquidity that they use to sell into and sort of come down here. But if I could get down to 1950, call it 1960, just to be on the safe side, and so you don't miss out on the things, I wouldn't mind be getting quite a sort of nice chunky position long at this point down here. But certainly still think that we've got higher to come. It's just a matter of whether they want to sort of snap a few people out first. Flip across to the copper. Copper's been a great trader. We did see the break yesterday, so it's in a bit of a tough position here because you know hit the alerts, which I had sort of set up above this zone here, but obviously couldn't hold it. This is the 4 hour, so it moves right back up into it. So this is the sort of price action, obviously, that we were sort of kind of looking for. The sort of break up here, the back test of this zone, and then a push forward here. So let's put an alert on top of this one. Upper range, upper range confirmation. So basically, what we've seen here is we had this little sort of short-term channel. I mean, we had an even small little one inside it, but this was the big one that we sort of closed the week high. We got the push on the Monday. We got a break at the top here, and bang, it got sold into. So now we could be in a zone. Obviously, this is a couple of cents or whatever sort of past this point, but regardless, we've got the break, we've got the back test. So this is now this part of the line coming back down. Now we want to see it sort of take out that high. Once we take out that high, then we push on. Then we start to look, okay, where are the other points that, get rid of these weekly opens, that was from a few weeks back. Clean this up a little bit. Oh, keep that one. All right. So yeah, what we want to see now is obviously a break of the highs that we put in yesterday to show a little bit of a continuation. Things that we're looking for then are, you know, horizontals from across the previous highs over here, the bodies of these ones here. So this could be a little bit of a zone here. This with the underside of the triangle, I think this area again will give a bit of a sell-off and then bang. And I'd confirm this higher sort of range to potentially be coming into play. So we've seen the first step of this. We had the break yesterday. It hasn't managed to sort of continue to just sort of melt up higher, but that's fine. Come back here with the break with the back test. So back on the zone and confirmation on the day on the second break of that one there. But certainly copper looking to sort of pick up a little bit here. These things also come in line with USD sort of being a little bit more stagnant, maybe sort of like China doing more work with sort of stimulus and sort of like China seem to be working very hard on a couple of fronts back there to I don't know compensate for their incredibly pathetic sort of real estate sector. So if they're sort of pumping up manufacturing, we're going to sort of see these kind of things like copper and that appreciate because obviously if there's more manufacturing going on, well, they're going to need copper. Copper's the demand's going to go up for it. The demand goes up for it. The price is going to go up for it. And speaking of which, we actually have in I think is it just over an hour, just under an hour now, the manufacturing PMI from China. So it's tipped 50.2 previously, 50.2 expected. So it's expected to be flat. 50 is the benchmark. Further away from 50, the better the result, or worse the result, depending on which way it sort of obviously flows with it all. Given everything at the moment, I'm expecting probably a beat of expectation. And I think a beat of expectation will drive copper. I think obviously it'll obviously drive the the yuan a little bit more as well. So copper certainly playing along nicely. This major supports down here played their part with that negative divergence that we've been sort of looking at. And obviously this more favored move is sort of playing out. So managed to get past there. It's actually, if you look at that on a daily, it's a pretty ugly top wick on there, and it didn't manage to close the daily. So that's one thing. As I said on the previous chart, you need to go through the different time frames. So you want to see that take out of that wick to confirm this one. Okay, and finally just the one. So really still just mega grind. We did sort of put this 1 hour. Let's see how this, because it looks like it's sort of coming right back to it now. This is that 1 hour trend line that we put in yesterday. So obviously we can see on this here, we got 1, we got 2, we got 3, 3, 4, whatever there. We got 5 here, so 4. And it's obviously bouncing straight on it right now as well. So I think a break this lot here, we can have a look at sort of like some lower time frame moves. We'll give these zones here. I'll put it down on the wicks just because otherwise they're just getting too close really. And they're the sort of levels to get down. This grey one's probably the more short-term prominent one, because obviously this is a large one down the bottom here in the high time frame. But for the time being, I mean, it's just really just grinding and grinding and grinding, isn't it? Yeah, if we can pop this short-term horizontal, then we see it continue to move back down. And I think it's not without a possibility that if we break this sort of little zone here, let's put a word on it. Cool, and that would be the alert sort of to come back down here, short-term price target over 730. But realistically, that's all very well and that sort of looking on sort of such a short time frame with them, but it's just grinding. It's just moving sideways with it all. It needs some sort of catalyst. It needs some sort of driver. It's been pushing up every single time, but of course this time now we've got a lower high. So, I still think we'll get a big push back down to this sort of area over here. And what we're starting to look at now is you're going to get that, as you can see with you, well, this will be the confluence because you'll get this sort of rising support plus the sort of horizontal support coming in. So I imagine this will give the bounce back up. And as you've got it marked out here, retested the bottom side of these sort of medium-term supports where I think it's about to tackle over the next day or so, or it could be the next couple of hours, depending on how the data comes out from the PMI, because we're starting to see the second drive here wasn't managed to sort of garner even a tip, a crossover of the RSI. So I imagine this will sort of follow through and sort of push back down to the downside here. All right, cool. That's about it from me for today.